director at Elixir Equities, is now with us. Dipan, stocks have rallied, but valuations of the PSU banks are still relatively cheaper than the private sector banks. Would you be a buyer in any PSU bank? You know, State Bank of India comes on everyone's list. What about PSU banks other than that?
Yeah, good afternoon, Rima, and thank you for having me on your show. Yes, I think we are seeing a fabulous trading rally in the PSU stocks, which have been unabated. And even from these levels, I think next 6 to 12 months looks very positive for the PSU banks. We are seeing the process of re-rating of price to earnings multiple and price to book multiple also taking place. And I don't think that their costs in terms of NPA provisioning are going to go up in the next at least 3-4 quarters or so. So we have a nice trading rally. I think next 12 months look good for PSUs. But if you have a 3 to 5 year type of a view, then you cannot be not in stocks like HDFC Bank or Axis or ICICI for that matter. And we're very positive on IDFC First Bank as well. Disclosures of Vienna clients are invested. So medium term PSU banks look good, but on a longer term time frame, it's the private sector banks we favor.
Okay, since we're talking PSU banks, by the way, there are specific calls that have come in on BOB today, Bank of Baroda. Let's go back to Abhishek. Abhishek, run us through which are these views. I remember 2 brokerages wrote on BOB today.
Well, Surbi, as you mentioned, there are brokerage notes that have come in on Bank of Baroda. One of them is DAM Capital. They have a buy recommendation and they have increased the target price to about 250 per share from earlier target price of 230 per share. They say that Bank of Baroda could actually outpace PSU banks in terms of peer competition with respect to ROAs, especially wherein they are expecting the ROA of BOB to be around 1.15% to 1.2% over FY24 to 25. This will benefit from a strong transition undertaken by the bank in last 3 to 5 years. There are 3 key pillars of transition. They say improving mix towards retail, especially the unsecured book, which can actually aid the net interest margin or the yield of the bank, and continuous strengthening and formation of new verticals with investment being done in talents as well as lateral hiring. So around 20% of the loans as per them is based on MCLR rates, which will see repricing in H1 of FY24. This could actually boost the net interest margin or the yield of the bank. As a result, the bank is gaining traction with higher than industry business growth, benign asset quality and improved tech capabilities as well. We also have Citi who has written on Bank of Baroda with a buy recommendation. Target price has been raised to 245 from 220 that they had earlier. They say that the fee income has scaled up. 3.3% net interest margin and less than 1% credit cost will support ROA or return on asset of about 1%. They are confident that the bank can actually deliver with respect to credit growth anywhere between 14 to 15% YOY, or 1 or 2 percentage points higher than the industry average, and a net interest margin will be sustained at 3.3%. So the scale up of unsecured loans, focus on APF within the housing loans and broad-based growth in other retail segments will aid in 1.5 in terms of the growth, asset growth that they are forecasting. So focused initiatives, targeted segments that they have, and also being taken up to scale up the fee income is the focus of the bank, and that will help them in achieving the ROA. Back to you.
Okay, got that. Thanks very much, Abhishek, for all of the details out there. Well, Dipan is, of course, with us on the show. Dipan, we've spoken about some of the top gainers of the day, and they are from the financial services space. I want to talk to you about the top nifty loser of the day, and that is Eicher Motors. Given everything that's going on, suddenly this premium end of the motorcycle category, it's all glitz and glamour here. So many new launches. What's your sense? I mean, there's Triumph from the Bajaj stable, and then there is obviously Harley, Hero. Can the going really get tougher for Eicher? And how do you rank and rate all 3 stocks?
Yeah, Surbi, good afternoon. Yeah, I think it's a bit of a surprise to see Eicher being marked down so significantly. I think I just saw on your flash, I think it's a 8-year type of a loss, single-day loss in Eicher Motors. Again, the disclosure Vienna clients are invested. See, I'm not too perturbed about the competition from Triumph or Harley Davidson for that matter through Hero. Many other players and challengers have come, but they have not been able to make much of a dent to Eicher's market share. Of course, they've been chipping away at it, but the market also itself has been growing. And if you notice what is happening in iShares is that the actual volume growth is coming from the sub 350cc bikes. And over there, I think the competition is still quite limited. I don't know whether Triumph and Hero Harley are in that segment right over there at the 350cc. But given the brand and given the kind of distribution network and the kind of aura these bikes have, they are like, lifestyle products more than bikes. I'm not too perturbed, and such corrections are good entry points into Eicher Motors on a longer term basis. Do keep in mind that it's the last company which will get disrupted by the EV revolution, where the likes of Bajaj Auto, Hero MotoCorp, and TVS are going to see massive disruption next 2-3 years as the EV sales continue to grow at whatever 40-50% as against 8-9% type of volume growth for the regular traditional two-wheeler motorcycles.
So is Eicher on top of your pecking order then, Dipan? I mean, if you're talking two-wheelers, Bajaj, Hero, let's throw in TVS, is Eicher right at the top? And what would be the, let's say, the next?
Yeah, absolutely. Disclosure that Eicher is the top pick and among the top 3 picks as far as autos are also concerned. The first, of course, being M&M, Maruti, and then Eicher, we would rate it that way. But, these are great levels, and you will see the performance of Eicher has been pretty decent last 2-3 quarters. And I'm very optimistic on the June quarter numbers as well. They have a large revenue flow coming in from a lot of accessory sales also which take place. And they haven't even scratched the surface when it comes to exports. So many positive factors going for Eicher, which is why we have a positive view on the stock.
Dipan, hi, afternoon. Talking of lifestyle, the other one is, the entire sort of alcoholic beverage space, right? You have Radico, which was up quite sharply. McDowell's has been a bit of an underperformer, but there are so many smaller companies, distilleries, etc., which have done well. Some of these bulk companies. Do you any views? You don't own anything in the space?
Yeah, see, very interestingly, the likes of McDowell have underperformed in terms of volume growth, price performance as well. And smaller players, as you mentioned, like say Global Spirits or Tilak Nangar or Radico Khaitan, have done exceptionally well. And what I understand is that the alcobev industry is highly regulated at the state level, and managing the regulation, having the right distribution in place, getting the right price increases is the key to success. And I think the smaller players are better equipped and are better able to manage the regulatory regime than the likes of McDowell, which is why I think McDowell has lacked growth compared to these smaller players. I'm not completely sure of the valuations, but generally very positive on these 3-4 smaller breweries or alcobev companies. And these could be you could have a nice long-term secular growth momentum in these companies as well, because they are trying to move up the value chain by launching more and more premium products. And it's an industry which is, evergreen given the demographics in India. So rather than buying United Breweries or McDowell or United Spirits for that matter, I prefer the smaller alcobev companies.
I just wanted to point out.
Finance catches your fancy at current levels?
Yeah, I'm speechless with the performance,
It's extraordinary for an NBFC of this size to grow 10% quarter on quarter, 30-35% year on year. It's absolutely extraordinary.
Please get them to your studio and ask them what are they doing right at this kind of growth rates at this level of competitive intensity and at this scale. I think it's absolutely amazing. And one of the unnoticed facts about Bajaj Finance is its ROE, which you just discussed, 23-24%. It's amongst the highest in the industry, well above any of the private sector banks. Of course, you can't compare, it's not apple to apple. And that is one of the reasons why the stock also trades at premium valuation. Not to mention that they have handled all the crisis which has come in the NBFC space, right from ILFS to the COVID crisis, pretty much without having major damage or hit on their NPAs. So I think they are doing something extraordinary over here. And as a shareholder of the Bajaj Finance, I'd just like to congratulate them for this phenomenal performance. And now looking forward to their first quarter numbers for FY24.
So you're clearly a shareholder. There is a disclaimer.
Yes, shareholder, investor, recommended to all our clients
Happy
as well.
shareholder. But would you buy it at current levels?
The thing is, it's a psychological, decision over here. So Bajaj Finance, you must have bought 10 years ago at that 140, 150 range, and then you got a lot of corporate action on that. Now to buy at 7,000 these prices is a bit of a mental challenge, I would say. But I think it's a great great stock, and maybe not at these levels. You will find out corrections, maybe a good entry point as well. But at this point of time, just want to remain invested.
Okay, Dipan, we'll leave it
There's
there.
happiness in a share.
You can't get the happiness in a bottle out of your head. All right. Thanks very much, Dipan. Appreciate it. Good speaking with you as always. So, yeah, I mean, happiness all around. Well, let's welcome in Anshul Sehgal. He's head of executive.